What's up, everybody? So today we're going to do a little bit of an update on C3 AI. I'm pretty excited to do it, actually, and I'll tell you why in a second here. But before I do, as always, what I want to call out here is a few things. Number one, I know you know, but this isn't financial advice. And the reason it isn't, I don't know your financial situation. So I can't ever make a recommendation without knowing what you have, what you're working on, what your personal financial situation looks like. So really treat this as education and a first step towards doing your own due diligence, which I think is really, really important in the first place. The second thing, I have to call this out because it's just the responsible thing to do. I am a significant shareholder of C3 AI. I have been for a while at lots of different price points, and also at times will hold derivative style positions. I want you to know this because I'm going to present this data in my own viewpoint. I am not affiliated with, in any way, shape, or form, this company. I do not currently use their products, nothing like that at all. I really just want to share this because it's important to understand that when you're getting information on a company, and especially in and around its earnings or stock, that you understand if there's any kind of hidden intentions. So I just want you to know I am a shareholder. I do own shares, equities, and options at times. So thank you for that. So let's jump into C3 AI. I've been covering this over the past couple months a little bit here and there, but what I want to do is take a chance to talk about sort of both where the company is positioned in the realm of enterprise software, as well as go over what we have from the most recent investor presentation. And again, this is going to be my take on what we've seen in here. And I purposely didn't go over this ahead of time because I wanted to provide like a really genuine on-the-spot take of what I see within the data here. And then also, I'm gonna do this live. It's after hours as I'm recording this, but I think this was going to be a good take. I want to see what the price was sitting at right now. So today the stock was up. Wow, actually not bad, 3.44% on the day. And then after hours, which is after the market closed, it actually continued to rise another 0.26. So pretty good day all in all for C3 AI. And I think there's a number of reasons for this. But before we jump into the weeds, I want to talk about what it is that they do. There's a lot of videos out there from a lot of different people talking about a lot of different AI and machine learning companies. Now, let me be the first to say, in any industry, especially technology and especially AI, there can be a lot of winners. So always have that as a consideration that you don't need to pick the one good one or that one is so much better than everyone else. It really depends on the use case, the situation where the company is trending, where they're sitting, where they are within that environment. So in this case, one of the things that's important to call out, I do a lot of videos around C3 and Palantir. They're very different style platforms. I'll talk about that in a second, but also very different from a market cap perspective. It's important to understand why. So with C3, their entire pitch, frankly, is they are the world's leading provider of enterprise AI. Now, I think this is both a genuinely brilliant and easy way to describe what they are. They are providing enterprise-grade AI, which to me, as someone who works in this field, means enterprise-ready or sort of enterprise supplemental. Whereas Palantir, for those who follow that company, is really providing a total platform, a base to build upon that's layered up and above itself with different levels of platforming across lots of different functions. C3 AI as a company is really a little bit different. So the way that they sort of describe themselves in more detail is, and I'm going to read this right from what they write, C3 AI is a leading enterprise AI software provider for accelerating digital transformation. Now, what this means is there's a lot of companies out there who are not operating in an efficient way. They're not operationalizing data. They're not operationalizing a multifaceted approach to working with their customers, their partners, their employees, everything, right? It's all about how they connect with and leverage today's modern infrastructure of data and analytics to do what they need to do. Now, again, I don't want to hit you with the marketing stuff, so I'm going to read right what they wrote here. The proven C3 AI suite provides comprehensive services to build enterprise-scale AI applications more efficiently and cost-effectively than alternate approaches. The C3 AI suite supports the value chain in an industry with pre-built, configurable, high-value AI applications for reliability, fraud detection, sensor network health, supply network optimization, energy management, anti-money laundering, and customer engagement. That's a mouthful. Let me give you the real basic version, and then we're going to jump into the weeds here because it's really important that you understand why some AI companies have huge valuations, some don't have as big of a valuation, but why both can potentially be a winner. So what they're really saying here is they've taken the steps to push the process of building these applications with AI a little bit further down the pipeline. They're almost like a templated perspective. For those who are older like me, you might remember Mad Libs, right? Where you could fill in the blank of a story with a noun or an adjective. And then when you would read it back, it would be a funny story because it was mostly built and you got to put your little bit on top. This is a similar idea. Think of these as pre-built homes that you can then walk in and pick the finishes, the kitchen, the color on the walls, right? This is starting with something and making it for your business. So it helps you to get a little bit of acceleration in what you're trying to build, where you want to then deploy it and point it at from a data perspective and an end user perspective as well. It's really important to get that this is different than a true hard platform. Now, you could argue that there's a lot of things that are similar or they do some of those things. Sure, I get that. But this is really about being a software provider that has some of the process already pre-built. Oftentimes, I like to think of it in terms of that house example because in some cases, I want to go to Home Depot and buy the cement in the mix for the basement. I want to buy all the lumber to build the house. I want to buy the roofing material to put on top. I want to buy all the components, the pipes, the electric, the nails, the screws, the windows. And you can really build to your heart's content. Here, what we're saying is, hey, we've got a general design already built. Now you come in and put your piece on top of it. So that's my starting point here before I jump into the weeds. So let me do this and not waste any time here at all. I'm going to start sharing my screen as soon as I find my button here. It's always the hardest part of this sometimes is making sure I hit the right buttons here. So this is the investor supplemental presentation from these folks, okay? And the reason I'm calling this out is, for lack of a better way of saying it, these are their own words, okay? So this is a pretty big thing because I'm not generating this on my own. I'm taking their own words here and I'm providing my interpretation of it. The reason this is important is I may not always know everything about the company, but I think having some perspective is really important. And as usual, even though this is their disclaimer, I'm going to call it out anyways. You should never, ever, ever, ever make decisions about a company based on what they're saying could happen or might happen or are forecasting to happen. Now, as investors, this is why we do due diligence. But again, this is the second slide on every presentation you see for a damn good reason. They don't know what's going to happen. They can predict it. They can think about it. They can present it, but they don't really know. So always ensure you understand the risks that are tied to that, okay? So here's sort of the highlights that we know from this most recent earnings, okay? And right at the bottom, I want to be honest, I love when I see this stuff on an investor deck, right? Record-breaking performance for this company. So the top line performance was revenue of 69.8 million, right? Just under 70 million, which represents a 42% year-on-year growth rate. If you don't know what top line is, this is when you think about an accounting of everything that happened at a company. This is basically all of the dollars that came in before anything was taken out, the top line of that report. That's 70 million, right? It's a huge jump for them. From a fundamental perspective, that accounting perspective, right? Their GAAP RPOs were at 90% or plus 90%, and non-GAAP was plus 81%. So what they're saying here is that this was yet again another huge year for them from that perspective as well. Now, here's a really good one to think about. Their scaling and diversification process around customers. What they mean by this is not only more customers, more types of customers, more industries, sectors, subsectors, use cases, right? That's what they're really saying. Jumped up to 218 total. And this is plus 82% year-on-year growth. And they're calling it out here again that that's across 15 industries. This is really important in the commercial business, especially for software, because a lot of customers do not want to buy what's not already being used by other peers or other sector peers. They also want to see use cases and positive sharing. So references are a normal thing, right? Hey, I'm not buying this unless I talk to 2 customers who are using it successfully and they can tell me the challenges and the pluses they've gotten from it. So keep that in mind too. And then an interesting point that I'm noticing is being a really big trend across a lot of companies nowadays is they're calling out that they have a solid balance sheet with over $1 billion in cash and investments. Now, I'm always curious to know where's the line drawn between cash and investments, because having $1 billion in cash is not the same as having $1 billion invested in other companies or other investments or whatever. But just a big call out that they do have a lot of standing a balance here from cash and investments. So I'm going to go over these same things that we're seeing again here, right? Like at a glance, here's what we have, right? We've got revenue, subscription revenue, non-GAAP gross profit, remaining performance obligations, and non-GAAP remaining performance obligations. So at a glance, everything is up. The year-over-year changes are significant, right? Revenue's up 42%, subscription revenue's up 34%, non-GAAP gross profit 50% up, remaining performance obligations way up at 90%, and non-GAAP RPO is also 81. So this is really, really a great slide, because what you want to start to understand here is how much of their model can start to become very predictable for an investor, or for someone who's looking at this, right? If their total revenue is about, we'll call it 70 million for sake of conversation, and their sub-revenue, subscription revenue, that recurring revenue is about 57 million, that gap is pretty close. That means a lot of their business is really on that subscription perspective, and it's going to be able to be something they can renew. Typically speaking, those renewals have a lower cost, customer acquisition cost, because they're already there. They simply just grow the account. So I'm going to be looking further here for things like net revenue retention, net dollar retention, et cetera. Those are the numbers I care about. As you can see also, their gross profit from a non-GAAP perspective is also up. This has been a big deal. This is something I think myself as an investor and someone who's been in C3 for a while as well, even at some bad stock prices, for full transparency, I need to see more profit, because profit's where we're going to see those multipliers come in to really get the stock back growing. I think this is pretty obvious stuff here. Let me just see if I can move this up a little bit. So their quarterly total revenue has been doing pretty well. I think where we saw some real bad hits was back in FY21 Q1 and 2. We started to see those declines come in. But for the most part, we've been pretty steady Eddie here, right? And that's what we got to keep seeing. I don't mind if we get some stagnation intra-quarter, but as long as overall we're seeing growth, then I feel good about it. And this is a solid chart for where they are in a pretty competitive industry. Listen, that's not an endorsement, by the way, but at least what we're seeing is positive news here, okay? And that's the key for me here looking at this. So from a revenue mix perspective, this is what I was mentioning a moment ago in comparing subscriptions to overall revenue. So they're looking at this in the perspective of they have really two pieces of their business: subscription revenue, which a lot of ways you could think of as SaaS, and professional services revenue. I want to really explain this in simple terms, because it actually is really simple. They do two things. They sell software and they help you install it. That's professional services, right? Install, train, build, whatever. So in this case, what we're seeing is both the overall stack is growing, the individual subscription is growing, and professional services revenue is also growing. And in fact, actually, this is kind of interesting that professional services revenue has gone up by almost 100%, 98% year over year. Now, what I'm really curious about is when will we start seeing professional services level off, because we'll have third-party partners coming in, or implementation partners, or service engagements outside of the company. But again, we're not addressing that on this screen. What we're seeing, though, is customers are continuing to grow. That baseline customer metric has grown on the previous screens. And additionally, professional services growing, which in my opinion isn't bad. I do want to take a pause here, because I think this is a really important moment to speak to this. I may not have mentioned this on any previous calls. One of the reasons it's great to invest in companies that are sort of like a Starbucks or a McDonald's. I'm not saying that either of those are good or bad, but when you can look at a store and figure out the details of how much store that makes across products, across revenue models, across any kind of metric you can imagine, it becomes very easy then to say, well, for every store, these are the metrics times this many stores on average. It makes it very investable, very easy to invest in. This is often the challenge with companies like this. So these kinds of understanding of the way the company is growing over time across different models of revenue is really important to understand. And so seeing these kinds of growth rates, for me personally, I can appreciate this. But one caveat that I don't want to see in sort of next year's earnings here is where we have this 13% of total revenue for professional services to now being 18%. I'm not saying that it's bad. What I'm simply saying is I don't want to start seeing more of the revenue come from what is typically a relatively expensive professional service revenue case, right? Because in these cases, you're paying people typically a lot of money to do the professional services work, and they may not have that kind of long-term margin that you get from a standard SaaS business. Something to keep in mind, team. Again, this is something everyone is talking about in the AI space. I don't care who you follow, whether it's C3, AI, or anyone else out there. If you are not seeing customer count and expansion, there's going to be a problem. growing 82% year over year. And granted, it's not like they had that many in the first place. This is still a great metric and a great number. Jumping over that 200 mark in Q2 is huge. Getting there to 218 now, I think is good as well. We just need to make sure that just this trajectory is followed. Slowdowns here are going to be a problem. And I also want to start to see net revenue retention following all these new customers. Otherwise, what's the point? Now, I don't want to get too much into these pieces here because I think we get into the weeds that at a surface level for a general walkthrough here isn't necessary. But what I want to call out here is both the non-GAAP total gross margin and the non-GAAP subscription gross margins. Sorry, a lot of words here. Are throwing me a little bit, right? So non-GAAP total margins, obviously we've seen some growth. This is good. But what we aren't seeing is on the subscription gross margins, we're seeing a little bit of a decline. Now, this could be tied to a lot of things, more complexity, more cost associated. One thing I'm going to call out too that almost no one talks about because I think they don't know is a lot of these folks have to host their software, right? You don't just host it in the air. So if there are costs associated with perhaps sitting it on an AWS server, right, and those costs went up, this can eat into those margins. I don't know if that happened or not, but again, these are the things I'm looking for. It's not breaking my heart. It's not making me feel bad or having concerns, but we don't want to see this drop too much. We want big margins in software. Excuse me. Operating expenses, of course, I always expect these things to grow, but I want to understand why. In the first view here over on the left, we can see, excuse me, from a year-over-year perspective, non-GAAP operating expenses as a percentage of revenue. If you're reading this and saying to yourself, well, wait a minute, how can it be over 100%? That's a really good question. What this means, as I understand it from this chart, is that their operating expenses are now exceeding what they're doing for revenue, which can be concerning from the perspective of the fact that they're not getting cash flow or they're spending more than they're making in theory against revenue, right? So again, the three components here in blue is sales and marketing. In the grayish, at least on my screen, is research and development. And then the orange is G&A or what we call general administrative. These are typically all the other things that are included there. Now we see G&A has only grown slightly. Research and development jumped up by 4%. Sales and marketing costs, however, have gone down. So if the reason for these additional expenses are accurate here, we're seeing more research, more development on the products, I can live with this in the near term. But as a shareholder, I will make my voice heard that I better not see this in the future. And I will vote my shares to this effect. And I will actually typically write into IR and let them know that as well. Now, on the operating expenses piece, we see a huge, huge jump here. I don't have enough detail looking at this chart, but this is where I'm going to actually do some due diligence and read a little bit more into what exactly is going on here. The big jump in sales and marketing here sort of throws you from what you saw over here, right? But it's important to understand that different components can mean different things on these kinds of screens. I'm going to jump past these because I'm not too worried about income and margin from this perspective. This is sort of, I think, in line with what I was expecting. They're doing more work. They're trying to sell more. This means more sales teams. This means more growth. This means more factories and more hiring. This means more margin comes out of that income perspective. So just keep that in mind too. It's not that I'm ignoring it. It's not that it isn't important. It just, I don't get into those weeds sometimes on these kind of calls because there's a lot of considerations into what's being built into that. As an example, this is where you really want to read the 10 Qs and Ks and understand where all that data is coming from. If you don't know how to do that, I would really urge you to get a basic training on that. So here's what we have for guidance, right? For FY22 Q4, they're calling revenue of 71 to 72. And for the 22 year, they're looking at 251 to 252 million. Year over year growth, again, these numbers look pretty good, right? Double digits, 36 to 38, full year, 37 to 38. But we're still seeing losses, right? If these losses are attributed to research and development and the growth and expansion of the business, it's not going to keep me up at night, but I need to understand what the plans are long-term to do something about this and get out of it. These are just key concerns for me from a general guidance perspective. I always call these the Nascar slides because, I feel like I'm staring at a race car, which is cool. And I think the point, of course, here is they're working across a lot of different types of businesses, right? Energy, financial, manufacturing, etc. I think this is to be expected. Nothing here that I'm going to call out. Excuse me. This, though, is pretty interesting. I had done a piece on this a few months back, maybe I don't know, call it a few months back, I guess. And it was saying how they had won some of these big contracts. Um, I know that you can read what's on the screen, but I want to read it anyways, right? The DoD awarded a $500 million agreement with these folks. This is sort of an interesting dichotomy because we see everyone talking about the issues over Palantir and how everyone's saying, oh, well, they're not growing the government sector anymore. And that's suddenly what the big concern is, when all along that people have been screaming at them to say, you need to get away from government and really focus on commercial. Here we have C3 AI who's saying, we've really focused on commercial. We've done great there. We're growing. Now we're trying to win some more federal work. And I think it speaks to the situation that to be successful in this space, without taking into any concerns of what your specific product does, I think it's very important to understand that you need to be good at both. So C3 is trying to push into more Fed. Palantir, as an example, is trying to push more into commercial, right? There's a lot of crossover here, and I think there can be a lot of winners here. But in essence, what this was a 5-year agreement with the US DoD. And the goal here is to really push this more into this department. I don't think there's a lot to be said here, except to call it the fact that I think this is really, really interesting to see that they're gaining that footprint. They're getting some momentum here. They're trying to find more ways to get into the government. These are the kind of contracts I'm going to be looking to understand. Like, it might be 500 million and it might be an agreement, but it doesn't always mean that the forecast and the actuals match. So ensuring that they make that full 500 million in this agreement is going to be really important, and that they're fulfilling all the needs here. And then the question will be, do we see supplemental spend? Do we see growth, et cetera? That's what I'm looking for in this case. I'm going to leave this up for just a second while you read it, but I'm not going to speak to it at all. This is more of a general piece of knowledge that sort of feeds into that federal piece, right? So there's just a big key here where the government essentially is saying, like, hey, well, this is a new thing that got signed into law, but essentially what they're saying is this is going to be an annual bill that Congress passes that will clearly state budget expenditures and policies for the DoD. So it's really this idea of creating a little bit more transparency around what's going on. And as well is, we now know that we have JAIC. If you haven't heard of this before, this is the Joint Artificial Intelligence Center. And what it's going to do is let contracts happen a little bit easier with big name AI companies. I don't think C3 would have put this in here if they weren't considered one of those companies, right? This will also help from the perspective of allowing the DoD and other connected pieces act quickly to buy what they need to develop AI solutions. The fact that we've already seen some contracts take place here is obviously a good sign for C3. I'm not going to speak to any of these new folks on the board. I want to call this out, right? If you're not familiar with the stock repurchase program, it's really simple. Let's say in the public markets today, there's 1 million shares of C3. I don't care how many there are, just for the sake of conversation. There's 1 million shares currently available. They trade at $10 a piece. They have a market cap of 10 billion. What happens during a stock repurchase program is C3 AI will use cash on the books or other sources of capital to go and buy shares in the public market and bring them back behind the scenes and lock them away. So now there's less shares in the market. And in theory, those shares will rise in price because the market cap hasn't changed, just the overall shares that exist. So less shares have to be worth more to get to that same market cap. So essentially in December 2021, the board of directors authorized this repurchase program of up to 100 million of C3's Class A common stock over the next 18 months, right? I'm not going to read all the other details here as well, but at the end of FY22 Q3, they had just over $1 billion in cash equivalents, and investments on the balance sheet. So this is all considerations as part of this repurchase program as well. So that's it, right? I'm not going to jump into the appendix, but this is what literally is in the appendix. If you're looking at this and it looks like a language that you don't speak, that's okay. I want to make a real suggestion to you though, team. You should learn to read these. It's really important to know what they mean. I talk on my channel about some of these different components, but the reality is the more adept you can get at understanding it, even at a base level, the better and quicker you'll be at understanding what's in here and why it's so important. So look, that's my take on C3 where they are today. I think that there's a lot of things to both be excited about, as well as some things to be concerned about. Again, I'm an investor. I'm not planning on getting rid of my shares actually at all right now. I'm not even thinking about that. So I'm still following what's going on here, how they're growing, are they acquiring the right customers? Some of the things I wanted to see in here that maybe I didn't, and I'm going to have to really get into the weeds now and figure out where they are, is what kind of net revenue returns are we seeing? Are they retaining customers? How expensive is it to get those customers? But what I will say is, in doing some research just in the past couple of days, thinking about this video, there's a lot happening here that's overall not bad news, right? Aside from the earnings, which were generally positive for the most part, there's also more to consider, right? We know that they're opening up a new center and hiring 1,000 people in Guadalajara. Well, that's great. That's a good piece of news to be aware of, right? So like, why are they growing? Well, the reason is because their customer base is growing, as we just saw from their earnings. So this is yet again one of those things that's important to understand that, right? So what does that mean? Well, it means that this new development center is where they're going to be able to do even more work, build more expertise in the products, find ways to bring it to more customers. And again, I want to say this just for the sake of conversation. I'm not affiliated with these folks. I own shares in it. So for me, this is good news. I want to see growth. I want to see R&D. I want to see the way they're going to go to the market. Now, one thing that I think is always important to talk about in these videos is it's not enough to just explain the numbers, right? How do you think about it? How do you play this? How does it fit in your portfolio, right? Now, I don't know how you build your portfolio, but for me personally, I like to really be fairly diversified. I really have started thinking about AI as its own component. And I realize I'm losing my voice. Sorry about that. I'm really starting to think about AI as a component, right? I have technology, but I'm breaking technology really down into different components, right? More than just SaaS, I'm trying to understand like data aggregators, AI and ML, right? I'm trying to understand data warehouse, data lakes, and cloud providers, right? And I want to make sure I'm representative across these. But part of that is knowing who fits where and how they fit together. That's why at the beginning of this, I really want to call out the fact that these guys are providing a different service than a Palantir. So if you're going to compare like apples to apples, it's really, really, really important to know what kind of apples they are, because they're not just red. It could be, one version versus another version. And sometimes you think it's an orange and it's a nectarine, right? So just make sure you understand that simply saying like, why is this stock price higher or why is this market price higher? Well, you have to understand it's based on margins, multiples, the base of how they go to market. And the truth is a lot of customers will have lots of solutions in this space. The large scale Fortune 500 companies need lots of AI solutions to solve lots of different problems. So with all that, I really appreciate everyone reaching out. I had a number of people ask me to do this for C3, which I cannot stress how much I appreciate the suggestion. I wasn't sure if I was going to do this or not. I also have a couple of other folks who asked me to do an update on the 2022 options challenge. I'm working on it. And also some detailed information around covered calls and other ways to make income from options. Working on that also. So without further ado, as always, I cannot stress enough how much I appreciate you watching. Please enjoy. Let me know if I can critique it. Let me know if it's not coming in clear. Anything else out there. Otherwise, thanks so much. Good investing out there. Be safe. Take care of yourself. Thanks for everything, team.